A bullish call from Goldman Sachs, the bank boosting its year-end target for the S&P. And while much of the rally this year has been thanks to the excitement that we've seen around AI, chip stocks like NVIDIA surging since January. But is it too late to invest in the AI boom? We want to bring in our next guest who still says there's money to be made, opportunity outside the so-called Magnificent Seven that's been getting a lot of attention. Here with some of his top picks, we want to bring in Dryden, Pence, Chief Investment Officer of Pence Capital Management. Dryden, it's great to see you here. So investors looking for AI plays, I know that you prefer to play it through supply chain for AI. Why is that the right way to go about this?
Well, thank you for having me on. The point of the matter is you have some of these stocks have really gone up a lot. But the key things within those stocks, within those companies, in the supply chain are provided from some others that haven't had this massive ascendancy. So when you look at, say, NVIDIA, you recognize that companies like Taiwan Semi and ASML are absolutely essential to what NVIDIA and AMD do, but they haven't run up quite so much. And so there's more room there, and they're absolutely essential to that supply chain.
And Dryden, Diane here. I want to ask, let's play the flip side of this. Where should investors be trimming positions?
Well, this is when you think of AI, you also tend to think of Intel, which was dominant for years and years and years. And the issue is they really kind of lost their dominance. They've dropped from about 80% of the market down to 62. They're no longer the leading innovator in that space. So you have many other companies kind of overwhelming or ascending far faster than Intel will. So I think we would avoid that in favor of the stocks I mentioned earlier.
When it comes to some of the opportunity inside of technology, so you're avoiding Intel, you like Taiwan Semiconductors, you like ASML. When investors are trying to pick out the winners and losers going off of this AI theme, what is the biggest red flag that you see? Is it just all based on valuation and some of that hype, all of that just already priced in to some of these larger names?
Well, there's really two things to look at. The amount of hype that's placed into these names, so they tend to get ahead of themselves dramatically. And anything that has a drawback or a pullback, the high flyers sometimes get punished, particularly if we look at different moves on inflation coming up or interest rates or Fed activity. But the companies that are absolutely essential to this, when we talk about, again, Taiwan Semi and ASML, ASML, they have 100% monopoly on extreme ultraviolet lithography machines, which are absolutely essential to any of the high-tech machines going forward. So they've got to be part of everything that happens in the future if you're thinking about AI.
Dryden, I want to ask you about, Seana brought us into this talking about that Goldman note, expecting the S&P 500 to hit 4,500, so boosting their target. And of course, you have some naysayers. Morgan Stanley has a different view. What did you think about this Goldman call? Is this bull run going to keep running?
Well, I think what you've had is a bifurcated bull run. You had like 7 stocks leading everything, and it's only now that we're beginning to see everybody realizing there probably isn't going to be a recession, and that we're actually going to, the market was pricing in a recession this year, and that's just something that's not going to happen. The market's going to be disappointed by that. So what's going to happen is you see this broader expansion of the rest of the market as people understand that recession's probably not going to happen. And so I think that Goldman's probably making an appropriate call here, and we see that happening too. But the next phase of the rally is broader going forward.
I'll talk about some of the risks that are out there in the market. Lots of focus has been on what's happening in commercial real estate, or maybe what could potentially happen in commercial real estate over the next year or two. I know one of your advising tips here to investors is to avoid Blackstone. What do you think some of the trouble in commercial real estate, what would that mean then for a name like Blackstone?
Well, Blackstone is the largest commercial real estate holder globally. I mean, and when you think of it, you've got about $1.5 trillion worth of mortgages coming due in the next 3 years, and we're in a completely different interest rate environment now. So you have companies that had mortgages, their profits were built, their performers were built around much lower interest rates than the new market. So you're going to have trouble refinancing these properties. We see commercial properties running into problems, and therefore that's why we think Blackstone is something to avoid because of their heavy exposure there. Just you're going to have a refinance problem in commercial real estate over the next 3 or 4 years, and it's going to be difficult for some of these companies. I think that creates some weakness, and interest rates are not going to turn around and go down back to 2% anytime soon. So the pro formas are different, the debt service coverage different, the qualifications are going to be different, and we see a little cloud for commercial real estate over the next couple of years, and think that someone overly exposed to that, such as Blackstone, should be avoided.
Let's get back to the optimistic side of the picture, Dryden. You expect this rally to become more broad-based. Outside of AI, tech, kind of semiconductor winners here, are there any other winners, specifically any specific stocks or sectors that you're looking to just increase momentum?
I think when you think of sectors, you look at, and if you take a look at the consumer, you really have two sides. We barbell the consumer. You have the high-end luxury part of it, tends to work very well. And then you also have this trade down that's occurred due to inflation at the low end. So you kind of can split that up with like an LVMH and a Walmart, barbelling those. But the other thing that we think is really important is, consumer staples and cyclicals, as these companies have been kind of held down in this anticipation of a recession. Now that that's coming probably off the table, or less of one that people were thinking, I think you're going to see those sectors, expand and catch a bid moving forward here. So we see a general positive improvement, both in discretionary and sectors, and we still like defense a lot.
Your two picks, Taiwan Semiconductor, ASML, what you're avoiding, Intel and Blackstone. All right, Dryden Pence of Pence Capital Management. Thanks for joining.